morning. You're watching Businessworld Live. I'm Danie Laurel. It's the start of a new trading week. Let's kick off with our banner story. The Monetary Board will hold their policy meeting this week, and analysts believe key rates will remain steady at record lows. A Businessworld poll showed that 17 out of 18 analysts expect monetary authorities to hold the key policy rate at 2% on September 23rd. Moody's Analytics' Katrina L. believes the BSP will continue its prudent pause and support the economy's recovery, which she describes as a laggard. She says further rate cuts are unlikely for the rest of the year, given that there is ample liquidity. Analysts also believe the Bangko Sentral will look past the continued breach in the target inflation of 2 to 4%, with ING's Nikki Mapa saying monetary policy action at this point may not have a material and direct impact on the supply of fresh food or crude oil prices. Bangko Sentral Governor Ben Diokno had earlier said that the BSP would keep an accommodative policy to support the economy's recovery from COVID-19 induced downturn. Diokno has said the economy might take until the last quarter of 2022 or the first quarter of 2023 to fully return to its pre-pandemic levels. Now, the country's outstanding external debt as of end of June hit its highest level since the end of 2011. Fresh BSP data showed a rise in external debt of over 15% year-on-year to $101 billion. It was more than 4% higher from the end of March. This increase in debt levels was attributed to net availments, mostly by the national government and private non-banks, as well as a foreign exchange revaluation due to the weaker peso. The end June level also brought the ratio of external debt to GDP to 26.5%. That's slightly easing from the 26.6% posted at the end of March. Kicking off our Monday markets report with a health check on our local unit. You can see on my Bloomberg terminal here, as was already mentioned, the peso continues to weaken, at least since the month of May. You could see that sharp rise here and then basically trading sideways. And now we are breaching again the 50 to the greenback mark, trading at 50.105 to the US dollar here, of course, as we see our rising debt to GDP levels. Let's take a look at our open this Monday morning. A bit of a slide here, down by 3.27. That's a touch lower from, and still nevertheless within the 6,900 levels that we've been managing to stay above from. And what is in store for markets this week? Well, this, according to the SEC, we are, of course, looking at at least they're hoping to have more activities happening in the market, especially from the SMEs. They're going to be celebrating the 88th year anniversary on November 11, 2024. So that's still in a couple of years, but they want to have at least 888 companies listed in the bourse by that time. This is according to SEC Chairperson Emilio Aquino. But he says that would only occur if more small and medium enterprises would be listing at the PSE. Right now, we are quite far from that goal of 888. We only have 272 companies listed at the local bourse. And you could see our PASHER, or the All Shares Index here, going the opposite direction of our index. That is the all shares of the bourse, that is actually up by 0.02%. Now, another one that is saying that there are quite some hindrances to SMEs listing is the Asian Development Bank, but they did say this is getting better. This, according to Shigehiro Shinozaki, a senior economist at the ADB. The local bourses program for MSMEs is actually key to gaining more of these listings for the smaller businesses. He says design is very important for the flexible capital markets to fit the demands of the MSMEs listing. Now, he says that there are several challenges to the listing. For example, he did mention that there's low market liquidity, high costs for listing, which include corporate governance requirements. So once this does get managed, there will be more listings coming through. Let's take a look at our big movers here, particularly the heavyweights here. You can see PLDT jumping by 2 9/10%. You can see Jollibee as well. So these are actually two stocks that we've been keeping our eyes on this morning. But on the downside, you've got Aboitiz Power down by 1 and 0.7% together with another, let's say, tech player, Converge, down by 1 and 0.6%. And here joining us at the start of this trading week to discuss these specific stocks, we have it. That's Japhet Tantiangco of Philstocks. Good morning, Japhet, and welcome back.
Good morning, Ma'am Dani. Thank you very much for inviting me on your show.
Japhet, since we're on the topic of best performers, at least this morning, you've got PLDT. They are, of course, in the limelight as well as the Bangko Central. At least Governor Ben Diokno has confirmed that they have approved the digital banking license of Maya Bank, which, of course, runs Pay Maya. Tell us, how much of an impact will this have on the telco player?
Well, with respect to that development, we see it as something that's very positive for PLDT. Well, for one, it's a strategic move. They're going into the digital banking space or into the financial sector, which is expected to be one of the booming sectors once, of course, the economy's recovery gains full speed. Of course, if the economy's recovery gains full speed, then you'll have more borrowing and lending activities, which of course is going to boost banking activities. So it's going to be beneficial for the banking sector, including the digital banking sector, where PLDTs have seen to be investing further in. At the same time, another reason why it is strategic is because it's seen to be complementary to their original business, which is telecommunications or data service provision. If you're going to further expand the presence of the digital banking space in the Philippine economy, then if more consumers are going to make use of digital banking services, then of course there's going to be more dependency on data services, and of course more dependency on data services is going to be beneficial to the telecommunication players, and that includes of course PLDT.
Can we compare the incumbents right now, PLDT and Globe? Because Globe seemed to have jumped as well on the back of a lot of rumors swirling that GCash may look at an IPO at one point in time. Tell us, is this a main area that they will be now competing on? Before it used to be the data versus the broadband, the mobile versus the home internet, and now it seems to be looking at the financial space already.
Well, yes. Moving forward, this is something that we can look into. Both Globe and PLDT, they're already having a tight competition in the telecommunications industry. Add the fact that there are new entrants. So you have Dito Telecom, and then you have the others like Converge ICT, which is expanding its presence in the in the Philippine market. So there's already tightening competition in the telecommunications sector, in the data provision sector, and so PLDT and Globe right now are looking for new venues or new avenues where they can boost their financial performance, their revenues, and their earnings. So right now they're seeing the digital or the fintech space, the financial technology space, where they can give they can make new operations. And given that both are venturing into it, then of course, if it's seen to be profitable, then of course, law of competition states that if an industry is seen to be competitive, it's seen to be profitable, then of course more entrants are going to come in, and of course moving forward, there's going to be tighter competition there as well.
Let's look at the banks here. A couple of years ago, with all of these fintechs entering, they did not seem to be that perturbed, right? There were still a lot of analysts that said, it would take a very long time before the biggest banks get affected. Can you still say the same right now, with, of course, now 6 out of the 7 digital banking licenses now approved?
Well, with respect to the growing presence of the digital banking sector, I believe yes, this is going to be a risk for our for our brick and mortar banks moving forward. With their increasing presence, then of course it's going to serve tighter competition for our current banks. And with, of course, with the with the tighter competition, of course, it could put pressure on their margins. And at the same time, take note that the economies, there's this ongoing and ongoing structural changes in the economy, which is more leaning towards the digital transformation. And given the structural changes, then we may see more dependence on economic activities that are lenient towards the heavy usage of data. And given that, there's really this strong prospects for the digital banking sector, or the digital banking space, for the financial fintech sector overall, which is moving forward, is yes seem to be a threat for the banks, for our regional banks.
Okay, so something to really be watching out for here. Let's move on to Jollibee in particular as a stock. So many things going on with this specific company. Can you tell us what are the prospects for Jollibee? Because every time there's an announcement of GCQ, of ECQ, they just really swing between gains and losses. And now they have a new announcement of investing 10 million euros for more stores in Spain in particular. They're opening one on September 23. That's in 3 days in the middle in Puerto del Sol in Madrid. And then they have a 50 million euro budget for expansion in Europe. Tell us, how does this all feed in? What is their situation now? Are you bullish about this specifically since we are in prolonged lockdowns in the Philippines, but they're looking at expansion abroad?
Well, with respect to Jollibee, first let's look at the local picture. With Jollibee, yes, they are sensitive. You can see that they are sensitive to the lockdowns in the Philippines. I mean, if you're going to impose strict quarantine measures in the country, or at least in parts of the country, then this is going to affect their operations. Restaurants or fast food service restaurants are really heavily dependent on dine-in services. So if you take this away from them, then it's going to heavily affect their financial performance. Of course, JFC is of no excuse. So that's with the local picture. But moving forward, I believe investors are also pricing in the prospects. Moving forward, if the economy is going to finally reopen further, if we see this current trend right now, which started in NCR, if we see this spread throughout the country, if we see more, the implementation of more GCQs and the allowance of at least more operational capacity for restaurants in terms of dine-in, in terms of dine-in services, then it's going to help GFC in terms of recovery. Now, moving on into the global picture, as we can see, GFC is continuous with its expansion. Just right now, as you've mentioned, they have one in Spain, and I think there are further plans. If last week there was news that its shelf registration for preferred shares has already been approved, and they could be using this for expanding their presence across the globe. And the good thing with this strategy is, well, currently, as I mentioned a while ago, in the Philippines, operations for Jollibee is quite problematic. But given this, they do have their operations abroad, which is in turn, mitigating the or temp offsetting the weakness that they're experiencing here in the Philippines. As you can see, the global economy is recovering, but countries are recovering at different paces. It so happens that the Philippines is a laggard right now. And if your home country is not really performing that well, then it's good for you to have operations in other countries which can support your financial performance.
And of course, they have that option. So tapping
Yeah.
into that. Finally, very quickly, Japhet, on the airline industry here, do you think that they've seen the worst and it can only get better? Now, Palace restructuring, you've also got NAIA finally hitting more than 600,000 passengers in July. That's the highest traffic since April 2020. Is it time to be going back into the airlines and say, okay, this is the lowest it could have possibly gone?
Well, with respect to our airline sector, yes, we with respect to the airline sector, we've already seen improvements in terms of prospects. The reason for that is, of course, vaccination across the globe is continuously progressing. And with more vaccination comes the reopening of more economies and the easing of travel restrictions. And of course, this is going to help our airline sector. It's going to, improve, boost their activities, give way for more air travel. So yes, we can say that things are starting to get better for our air transportation companies. But of course, there's still risks. Of course, there's still the risk of breakouts of COVID-19 cases across the globe. And if that's going to happen, we can't tell when the Delta variant spread will end. Of course, adding to that is if there would be new variants, which is as worse as this one, which would be somehow strong against the vaccines that we currently have. If those risks will pop out again, then it's going to be a threat. If it's going to be a threat for our airline sector. But so long as we won't have those risks, so long as the global economy continues to reopen, so long as travel restrictions are continuously eased, then we see a good picture, or an improving picture at least, for
Okay.
the airline sector moving forward.
Okay, still some cautious optimism there, better than the pessimism that we've had in
Yep,
the last few months. Thank you so much, Japhet and Tantiangco of Philstocks.
you're very much welcome.
Checking in on the biggest headlines, tourism receipts are expected to plunge again this year. That's as the country continues to struggle to control the pandemic. The Bangko Sentral says travel receipts may slump by 80% instead of growing by 15% this year. The Philippine Star reports that if it happens, this would be the second straight year after the country's tourism receipts slumped substantially by 79.5% last year, as various countries imposed travel bans to slow the spread of COVID infections. This, as latest data showed travel receipts falling by 82% from January to June. Despite this, the BSP sees a rebound in tourism receipts for 2022 with a growth of 25%. It said that international organizations see a strong bounce back in global tourism next year as the robust rollout of vaccines has allowed several countries to open up their borders. Now, the Transportation Department is asking the COMELEC to exempt its infrastructure projects, including the Mindanao Railway project, from the Public Works ban ahead of the election season. Transportation Assistant Secretary Amard Ejes said the Commission cannot process the request at this time as there are no guidelines for the Public Works ban just yet. All the department knows is that the ban will run from March 25th to May 8th, 2022, and will cover disbursement and spending as well as construction activity. If the COMELEC does grant an exemption for DOTR projects, the construction of the first phase of the Mindanao Rail project is set to start in April of 2022. And that's a first look into the business day. Today's Monday, September 20, 2021. Catch Business World Live for the market close. It's at 3:15 p.m. today. I'm Danie Laurel. Mask on, wash hands, stay safe, Philippines. We are One News.